Good morning. Good afternoon to our friends across the pond. I am Mark Sebastian. I am your only option, and I'm joined by Andrew T. Giovinazzi, the Viking of Volatility, and of course, Hans J. Albrecht. What do we have we come up with a moniker on you yet? We'll get there.
I don't know. Yeah, we're working on it. It's got to be right. It's got to be good.
The income imperialist. How about that?
The income imperial.
All right. It's a working title, folks. We're working on it. All right. Leisha is on assignment today, so she will not be joining us. But, today we're here to talk about what used to be jokingly called the front page of the internet, Reddit. And normally we wouldn't pick a stock like this, but its numbers were so eye-popping and so out of bounds in terms of how that stock performed that I thought, we've got to look at this. That's Wells Fargo. I was just closing a trade there. And here is Reddit. So Reddit has crossed 100 million active users. They've got almost as many as like 25% of the active users of Facebook, which I was kind of surprised by. And what changed on their earnings is that they turned a profit. They had huge revenue growth. So, let me just run through this. All right. They had $348 million in revenue in Q3. That was 68% up from year over year. It's a huge move. Advertising revenue was $315 million. They made $30 million. Their gross margins are 90%. That's better than NVIDIA. The positive free cash flow is $70 million. Basically, everything they did, the numbers were great. They're sitting on almost $1.75 billion in cash, and they increased their cash load last quarter. So all that's good. Only downside that I saw in their numbers was, $83 million in stock revenue. That seems out of bounds high. And then again, there's the issue with monetization. So, after that move, this is the PE on it is somewhere, it's an $18 billion company. It doesn't have PE because they haven't made money year over year yet. It's an $18 billion company. But when you look at probably in the same class, obviously slightly different, you have Roblox, which loses money, lost $1 billion, and it's worth almost 2x. They had great earnings. Now, Roblox has an easier time monetizing their users than Reddit because it's a game. But Reddit has such a bigger user base and so many more people with actual money on it. Like Roblox, like Valentino's playing Roblox. Is he going to be spending a bunch of money on Roblox? No. Why? Because his parents won't let him. And there's a lot of parents that are in that same boat. Mom, can I have $15 for this Roblox skin? And we're like, wait a minute. You're not even paying for the game. You're paying for your character to look like something.
Just make sure he doesn't have the password auto fill in on PayPal or something like that.
Yeah, no, for sure. So that's what I see there. Now, looking at the chart of Reddit, obviously, it's kind of an uncharted territory. You get this massive monumental gaps up further the following day, and then it's kind of eased back. This thing gets to, if this gets to kind of where it gapped to on the 30th, I'm going to be accumulating because I think this is a $100 billion company. If they can figure out how to monetize this, which Facebook did and Google did and X has done, then YouTube has done, they are going to make a fortune.
Well, they've got the playbook right in front of them now, right, Mark? Mm-hmm. I mean, they've got 15 years of Meta figuring it out. They've got more tools than ever. They're just on the cusp. They're like a little kid figuring out how to walk. Even though they've been around for 20 years, they're in this new world of monetization. I think that's going to open up a lot of possibilities.
I couldn't agree with you more. So kind of looking at the chart doesn't really give you a lot. If you go to what Leisha had pointed out in her chart, and I'm going to expand this so it's easier to see. Where Roblox gapped out completely out of its channel. And if you look at the top end of the thing of kind of where it is right now, it's bumping up against the top of this channel. And so it's at a spot where over the next couple of days and weeks, it is going to start building a new pitchfork, building a new volume profile. Everything will be new. I don't know that it, and that I think is the key here. So my take, short term, maybe a little bit more room to pull back, but not a lot. Long term, moon. Very rarely do I like a stock that is internet based, but they check all the categories, right? They're growing, they're making money, they're not overvalued.
It kind of is a no-brainer, which scares me. Like, if I had any idea that they were already profitable, like, I was surprised.
Everybody was. They were supposed to lose money and they didn't. They've really tightened the ship. And so, like, let's compare them to Snap. Snapchat's worth more than Reddit, which is absolutely ridiculous.
Well, also, but Snap has twice the number of employees. So what the heck are all those snappers doing?
Kicking back, enjoying their stock.
Well, they haven't had the cleanse that Twitter had. And Reddit probably seems like they're clearly running a little leaner of a shop.
Yeah, I think Reddit. So the best thing about Reddit is the content, obviously, is the users. And yeah, they're not. It doesn't look like they're overemployed. I got to be honest. So price to book 9-1, price to sales 16-1, or price to sales 16-1, book value $10. Like I said, they are sitting on a bunch of cash. Reddit's revenue per share was $6.61. Again, Snap is worth more. Revenue per share $3.13. Every metric I look at says people don't understand Reddit. We're at that juncture where I think the investing community doesn't get Reddit. And
I think that's part of it too.
Yeah.
That's part of it too, Mark. It's pretty new. They don't have the following that a lot of these other social media companies have had. And so that's also a tailwind, because you know how Wall Street is. These guys are lemmings. A couple of them are going to go, hey, this looks interesting. And then they're going to call a friend, and he's going to call a friend, and they start piling in. And that acts as a tailwind as well.
Yeah. So this is a stock that is going to eventually have it. We'll be talking about it this time next year. We'll be talking about a stock split. That's my take. All right. And there is my take on the fundamentals of Reddit. And with that, you'll notice we are joined by Hans Albrecht. It is his first session on the Ticker Highlight Show. We are no longer a trifecta. We are a quartet. And but a better, more powerful quartet. Now, Hans's focus is on creating income with positions. So he was like, "Well, what do I do here?" So I said, "Hans, here's my question. So I already own the stock. What do I do?" And that was kind of what he wrote about. And he's got some his goal for you in the coming is to help you create more income using options and create some income strategies, along with some of the other fun stuff Hans does as well. But for right now, he is our primary income producing trader using options. So Hans, what's your take on the Reddit here as a stock? Is it a put sale? Is it a covered call? What are you thinking?
Well, I'll tell you what. I think there's some interesting things we can do here, and you've already kind of laid the foundation here. And I think it's confusing. It's going to be confusing to a lot of retailers out there, because a lot of retail investors, because they're going to look at something that's just gone from 40 to 120, and they're going to immediately, and it's natural to think, wow, this thing is overpriced. But you have to understand, like you're saying, there is a sort of a sea change upon us with this stock. There has been a sudden realization. That's what the pop is about. The pop isn't about some sort of GME type squeeze that jams up a stock. This is a realization that these guys are starting to execute. And so that's interesting. So on the one hand, we've had this really great run. We can see, next year, like you said, maybe we'll see much, much higher prices. In the meantime, it has had a big jump. There are a lot of people who own this thing and who'd like to get out of some of it. And so maybe we're going to look at a period of digestion here on a stock that, has a lot going for it. I mean, these guys they've got this search feature that they're pushing out. Like there's like this translate feature that they're pushing out to 30 different companies. And think of what that's going to do to the eyeballs. I mean, think of all this expansion of eyeballs around the world. And so this is what the stock is going to start to price at time. Now it has priced in a little bit. So what do? Well, from an income perspective, which is what I'm focused on, you've got a couple things here. You could look at this as, okay, I don't own this thing yet. So let's take that number one. I don't own this thing. I'm looking at the skew. It's pretty flat, which is going to play into my next strategy. But first of all, it's a little flat, so it could price a little better on this. But I kind of like a 1x2 kind of structure on this thing as a way to say, you know what? I think it's had a good run. It's 112. It was 40 not long ago. I'd like to own this thing a little bit lower. So there are some interesting put structures you can put on where you kind of buy one and you sell a couple. And I priced it out, and you can own this thing into the 90s with the one that I'm looking at. And if it doesn't get down there, you're going to put about 3.2% in your pocket for this structure, because you're going to end up with a credit on it. So you're going to put 3.2% of the stock value in your jeans if it doesn't get down there. Worst case scenario, it gets down to a price that you really like on a name that is really starting to look very, very interesting. So it's almost, I love these kinds of strategies as sort of a win-win-win, because you're looking at it from an income perspective. 3%, you're looking at like 25% annualized. So it's not small potatoes. There's some potential there. And then, if it starts to move up, then you can start to look at some other structures later on. But that's a nice little way to clip a little bit of income from this name, potentially own it lower. Second, if you own this thing, if you're one of the lucky ones who actually owns this thing and you've had a good run on it here, you could, and because that downside put pricing is kind of not too expensive, we call that skew, but it's not that expensive. It's pretty flat. You could pick up a downside put and sell an out of the money call. So the one I was looking at was selling around the 130 to 135, for example. And you're going to use that money to kind of pick up some downside protection on that. So what that's going to do is literally what the strategy is called is a caller. And you're going to protect your holding. You want to give yourself a little bit of time. You don't want to do one of these for like this week, unless you're just trying to get through the election in FOMC. You want to give yourself a little bit of time for this stock to digest, and then set yourself up for the next move, which probably is going to happen in the new year. So you can do something like that. You can look to do these things for kind of even money. You can even spend a bit. So I like to put these on for even a little bit of a debit. So when I've made a whole bunch of money on a stock, if I've ridden a stock from 60 to 110, I don't mind picking up a little bit more of an aggressive strike to the downside and spending a little bit, because sometimes you're going to pick up a put that's not as reactive. So you want to spend a little bit. So those are kind of two plays. You don't own it versus you own it.
Yeah. So for those of you unfamiliar with what a 1x2 is, that would be, for instance, buying a January 100 put and selling 2 of the 90 puts as an example. This is a more advanced play, but it's something many traders, once they get used to options, definitely engage. Now, a collar strategy, which was the second thing brought up, is when I buy a put out of the money and sell a call out of the money against a long stock position. That is a very a well-regarded standard type of trade for long-term stock investors that is used by financial advisors and traders alike, and has been, one of the most common trades that we see in the option market across the board. All right, Hans, thank you very much. Welcome. We're excited. Love the war paint on you. We'll
thank you, Mark. Thank you.
And with that, and I don't know if Andrew, are you able to come back on? Or he disappeared for a little bit. Otherwise, I'm going to jump in again. Did we lose him on the? He's been having some internet issues, so we might have lost him. All right,
we might have lost him. Yeah.
So that's fine.
Yeah, go ahead, Mark. I was going to mention that you could also. Oh, is he popping back in? You could also, if you think this thing's a bit sort of toppy here, you could maybe even sell, the vols come down after earnings, the option pricing. When we say vol, it's option pricing. Yeah. You could bang out like a 120, 125 in December and clip some good income there. So that's another possibility, especially if you had a good run on it.
Yeah. What is interesting is, since this thing listed, even with that massive pop, they've brought the implied volatility back to kind of standard normal levels. It's not high. That's 30-day. And 60 and 90, they don't look very expensive either. In fact, 60-day looks really nice. 90-day relatively inexpensive as well. 90-day might have a little bit of earnings in there. I do like the stock to go higher. And if I wanted to just own Reddit for the long term, I would look at these January 115 calls and just own them. I'd buy the 115 calls for like 10.50 and just plan on the stock going up. If I'm looking shorter dated, again, right now, the stock has been kind of up and down. We are kind of up against Leish's pitchfork. So there might be an opportunity for a short-term little bounce trade. And you're saying, Mark, those options seem expensive. Well, relatively low vol for Reddit is in the 50s. So this is a stock with some teeth. It will move. If I was looking shorter dated, because the near-term vols are still very high, because they're still reacting to earnings. The longer ones look pretty good. 56%, I'll take that. When you're trading a high vol stock where the vol is still high, that's when we spread. Why do we spread? Because it reduces your exposure to implied volatility. Now, another reason to look at a spread here in Reddit is this. So here's where Reddit is trading, right around here. Notice how expensive calls are. As we go up in strike, call implied volatility premiums go up, and these are not worthless options. The 130 calls are $1. The 135s are 60 cents. So this is real implied volatility, and that this thing is showing its teeth. And that is why, if I'm going to trade near term, right, long term, I can buy a January call and forget about it. Near term, so November 22nd, November 15th, I almost have to spread, because if I buy the one, the least expensive option on the board, they're all around like 112, 113, 114, 115. So I might look at like these 114 calls that are $5.45, and I'm getting $2.45 or better. I'm probably getting $2.50 out of the 124. I'm getting $1.50 out of the 130s. So I can do that 16-point vertical and pay $4 for it. That's a 3-to-1 payout on a call spread. That to me is probably the best way to execute it. But if I want a near-term trade to try and play a bounce. But my trade that I would be looking at right now, if you said, Mark, you got to do one trade in Reddit, I'd buy the January 115 calls, and I'd try and pay $10.50 for them. And that is my trade for Reddit. All right. Well, folks, that is our breakdown on Reddit. Hans, welcome to the team and welcome to the Ticker Highlight Show. Reminder, we're here every Monday at 9:30 a.m. Eastern Time. So for Alicia J. Leslie on assignment and Andrew T. Giovinazzi, the Viking of volatility, I am 9:30 Central, 10:30 Eastern. Thank you, Mark Sebastian. And of course, Hans Albrecht. I'm Mark Sebastian. I am your only option. I hope you have a great day and a great trading week. See you soon, guys.
See you guys.